horizontal line. So how you see how we have right now the direction, we have this candle closing that gives us the what? The condition, but we have this structure in the way. So this is a trade setup, and this is an opportunity that I would pass up. Why would I pass it up? Because those structures have a tendency to create three different responses. Three different responses. The first response that we can have, and we're going to call this horizontal line a structure. The first response we can have is we can get to it and we can get that. That's called a rejection. So why would we enter into a trade? Well, we know that there's a 33% chance that the market could turn around, right? That doesn't make sense, right? So we don't do that. But you say, well, Neil, the market kept going. Yeah, it did keep going. But we don't have a crystal ball to know that would have happened. Yeah, that's hindsight. Well, if I had that, I wouldn't be doing this. I'd be playing the lottery. If I knew what was going to happen before it happened, So you don't know that that's going to happen. So that's a condition right there. We never make it to recognition. We never make it to entry criteria. We never make it to management. We never make it to exiting because we can't even get to recognition because there is something wrong now. So we find out early whether or not this is going to be a good opportunity or not. So this condition that happened was called goose mode, but it wasn't tradable. It was not a tradable condition. So when you're in the live tech room with everybody, the facilitator, and the facilitator says, we have a condition, oh, but there's a structure in the way, then we can't tell you not to trade. We can't say, hey, don't take this next trade. If you run over to that other chart and try to find the price action cycle, and then you go over there and try to find a trade setup, and then you take that trade in that condition, you're asking for trouble. You're asking for it. Because the first thing that happens when we get to a structure is that we get a rejection. The next thing that can happen out of structure is what we call manipulation. We go above that structure and come back inside of it like that. That's called manipulation. So we have rejection. So one of three things can happen as structures. So why is structure so important to know? That's a rejection. This is what we call manipulation. So that means that when this price got to this area right here, where we have this X, as it was coming to this yellow horizontal line, which we know as a structure, as the price was coming up to that and it closed, we already knew that, look, one of three things can happen. Either a rejection can happen at this yellow line, a manipulation can happen at this yellow line, and then the third thing that can happen at this yellow line is what we call BRB. The market can break it, retest it, and bounce off of it. Now, if that happened, that's great. That's great. But you don't know if that's going to happen or not. Because the fourth thing that can happen after this is what we call continued manipulation. Because that can happen right there. And it never goes away from that spot. And if that happens right there, you're going to be trapped in that trade. You cannot get out of it. You won't be able to get out of it. So, why would I execute a position? Why would I put myself in a position where I know that I only have a 25% chance of success? Because rejection is a 25% chance you can do that. Manipulation, there's a 25% chance you can do that. Break, retest, bounce, there's a 25% chance you can do that. I didn't write that. Break, retest, bounce, that's BRB there. Break, retest, bounce, and then continued manipulation. So those are the things that can happen when we get to that structure. So all of this is what we call forecasting. 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 So we know what's going to happen. All right. So that's one. What was that condition called? Goose mode. That's the first one. Why is it called goose mode? Because it's the first time that the price and the sequence happen after coming beneath the red, the white, and the blue. So when it turns back up and gets back into sequence, boom, we know it takes momentum to do that. So that's why we just called it that one. This is the one where we can get some green eggs laid, goose mode. This is the one. Now, so let's look at another one. Everybody understand that one? Does anybody have any questions about that?
When you're in a structure, you want to follow the top horizontal line and the lower horizontal line to make sure that you're not going above it, which is what you just were talking about, right?
No, what I'm saying is that when we get to this area where there's that horizontal line, any horizontal line is a problem. Any one of them. We don't trade through those lines. You see what I'm saying? Yeah, any one of those are a problem. So what I teach is the clear path theory. That means that we don't want anything to be in between our entry point and our exit point that we're looking to have. So,
what makes a horizontal line a structure? What?
Two things. One of them is software statistical spots that is picked up in the software. Others is me. So I do an analysis on the market every morning about 4:30 or so. And then I pass on those levels to the facilitators. And then they pass it on to the students, and you manually put those on your chart. So some of them are generated by the computer. You see that pink one? This pink line?
Yeah.
That's a computer. That's a software generated structure. This one, I put that structure on there because of something I did in terms of my top-down analysis. You see?
Okay.
Yeah. So that's what I did. So let's go interest setups. I want to show you this. All right, so you see this horizontal line here. That's a structure, right? So this trade setup is called a layup. Remember I gave you the trade setups? That one is called a layup right here. So as this price comes here, the price action cycle is impulse pullback. In this case, we got the impulse, the pullback, and it took off and went to breakout and it skipped consolidation. It skipped that. It just kept going. It was so strong. And we like those because that's a whole bunch of money here. But so this is what happened here. But what I want you to notice is you see this line here is a horizontal line that's a structure. Where we enter and where we exit, you see that? Where we enter and where we exit, there's nothing there. There's nothing to impede the progress of the price delivering where it's supposed to. Nothing, right? So there's no sideline. And when you go to Russell's class, which is the freshman class, everything on this chart, everything you're gonna be taught what it means. Like right now, you're looking at it, you don't know anything. You don't know what this is. You don't know what that is. You don't know what this is. These are called swing lines. This is called a structure. This is called a sideline. This is called a sideline. You don't know the field, but he's gonna teach you the field. And then when you go to the sophomore class, you're gonna learn the plays. And then when you go to the junior class, you're gonna start scrimmaging. And then when you go to the senior class, you're gonna get in the game. So if you don't know what that field looks like, it's a class, so I can't teach you the whole field in a lecture, but what I'm saying, what I want you to see is that's what is important when it comes to structure and why you can't skip anything. You have to be in the right condition. You have to be going in the right direction, and you have to make sure that there are no structures, there's nothing impeding the progress. Then you go to recognition. All of this is what we call analysis. The analysis takes place first, right? So,
That goose egg you talk about, the goose mode. The goose mode, is it where, okay, and it's in relation to the red, white, and blue line?
that's exactly what it's in relation to.
Now, the red, white, and blue line, is it where the red, white, and blue come together that creates red, white, and blue, and it kind of like spreads apart?
All right.
Or at that point, is that where it starts?
Yeah, you see, right, so the spreading apart
Right.
that you just named, the term that you'll be taught is called divergence.
Okay.
So we look for divergence. That's going into the teaching of the class, but that's what that's called.
And it defines itself when it goes red, white, and blue, and it diverse.
Yeah, that means the momentum is picking up. That means the spreads are getting shorter, the swings are getting wider, and the volume is picking up. And that's what we want to do. We don't want to just be in the market when it's going up. We want to be in it when it's going up right now. We don't want to be in it when it's going down. We want to be in it going down right now. You see what I'm saying? We're strategic and surgical with this. We don't want to, you see what I'm saying?
When you say right now, is at the point where they come together?
Yeah, right. At the point when you go through the process and you say, yes, that's the condition. Yes, that's the price action cycle. Yes, that's the trade setup. Yes, I have confirmation. Hit the button right now.
And you
If
wanna do
to
this
hit
for
the
these-
target right now.
All right, so and then when it first got started, you got you said that pink line is a computer generated structure.
This one here, yeah, correct.
Pink. All right, so when it first got started,
With that counter, with this counter,
right, that was a structure there. So would you wait till you get past that? Or-
absolutely.
Okay.
Absolutely. You wait till you get past all of them.
Okay.
We trade to, but not through.
Okay.
So if we get a trade setup that happens prior to that structure, we can trade up to it. You see what I'm saying? But we're not gonna try to trade through it.
Once these diversify, have they ever converged back immediately and you jump back in, or?
No, every single time you enter a trade, you're gonna go through that same process. So you do your forecasting, boom, you got your condition, you got your structure, you got your direction, boom, you got your recognition, the impulse leg, boom, you got your trade set the ITS, boom, you got the confirmation, you're in the trade. Once you get out of the trade, you gotta go back to the beginning of the line and go back through that same process again. That is why 99% of the people lose their money. Because they're not disciplined. You can't just jump in the market. Like, once it moves up and marks up, we have to wait. Because we have to go through that same, I got a good diagram for that. We have to wait until the conditions tell us to do that again. So, and this will help you with that question. Watch this. That's Rusty in his uniform. That's the car that I almost got killed in right there. Fell asleep going 80 miles an hour. And in my seminars, I talk about it. Fell asleep going 80 miles an hour. I was in a coma for 4 days. I broke my legs. I had surgeries for 2 years. And I had 6 surgeries on my legs. And that's what ruined my basketball career. That happened my freshman year in college. Okay.
What do what?
So that's another reason I'm not ashamed of God. Like I'm gonna talk about something. All right, so these are what we call the stages of delivery in the markets and how they work. So the market will stay in this range 61% of the time. It will stay in that range 61% of the time. All right, it only advances in this area right here 29% of the time. 29% of the time. And then it's gonna get back in this range. And then it's gonna go down 10% of the time. So to answer your question is once I go through that process of finding out and getting that condition and it finally moves up and I'm out of it, you can't just jump back in it because you don't know when this is gonna happen again. And if you jump back in there again and they do that, you're gonna lose that money you had and then they're gonna stretch you out and then they may continue, right? But they may what? Reverse. And now you've lost all that money. When you could have just nursed it, made sure you had all the conditions, everything right, and when it got ready to advance, you were in it.
And you have to know your risk you're willing to take.
All of that. Exactly. Once it gets to this point and gives you that layup and go up, then now you either in there and you stay in there for, but I don't. But some people do stay in there because all I'm trying to do is make $1 million. That's it. Right? So you don't have to do all of that to make $1 million.
So when you don't see what you're looking for out of these 5 steps, just back away from it?
Yeah, man, I go and get that.
Yeah.
It's time to do something else. That didn't do right.
Yeah.
It's a no trade day. I get an early tea time if it doesn't do what I want it to do. Because I'm not going to expose the money unless it does what it's supposed to do. That's the discipline.
Right.
That's the discipline. Like that. Now discipline, like you know how they sell stuff and they say batteries are not included. I can sell you this, but discipline is not included. Like that's not included. You got to bring your own discipline to the table. Like follow the instruction. And I know it kind of is a terse word when a grown man tell you to be obedient. But brothers, that's what you got to do. You cannot do anything other than this training plan, what you're being taught to do. You see what I mean? All right. So that's kind of how. So how the market works. Very large interests accumulate large quantities of the asset. That's what they're doing. So what they do, they have no money. It's like the bank. The bank has no money. They just have nice carpet, mahogany wood, but they don't have any money. They need you to make a deposit. That's why they give the banker an incentive if you can get people to open up accounts. Because that's how they get money. They don't have any. So they take your money and then they accumulate that and they give it to someone else, and then they make money and they give it back, and then they give you a little bit and they keep some for themselves, so they make money out of nothing. That's what we do. So we are just making sure that the large interests have accumulated what they want. And that's why we need to know the conditions. Because if they have not finished with accumulation, the conditions won't happen. You see it? It won't happen. When they finish accumulating, typically accumulation begins following a large markdown in a bearish market. So typically the market comes down and then it accumulates right in there. The smart money guys accumulate so much of the asset the smart money guys must accumulate so much of the asset that they keep, listen to this, they keep the trading range going sideways. They do that until they have absorbed most of the supply.
So it's on purpose that it goes south.
Yeah, boy, the rate is right.
Man, that's the game.
Told him,
That's
it's
the
a
game.
game, man. It's
That's
a
the
whole
game right
game.
there.
So if you don't know the game, how you gonna win it?
But see, but at certain points, it's gonna take off.
Exactly,
You gotta go
exactly.
down.
The
Get
market
it now.
man, it's not haphazard activity. It's very intelligent. It's very intelligent. And one of the first things that you're gonna learn in that freshman class is how do you know when the market makers have interjected themselves into the equation? You can know that. We know that. We said, oh, there they go. Right?
Do you see this percentage of assets? And then once it reaches a certain percentage of what's involved?
No, that's a little fundamental analysis. We don't do anything. We are reading and reacting. If what we see and what we're looking for happens, what you're talking about has happened.
Okay.
See, what you're talking about has happened in order for the software to trigger and give you a trade. That already has happened. They're finished. They're finished. You have no way of knowing that You know, because now, so how do we know? How do we know they're finished? The first thing we have to do is we have to do that condition awareness, right? Well, after we are aware of the condition, so let's go get us a condition that's tradable. All right. So here is one. What condition is this on this counter at the close of this counter? Based on what you know so far.
At the close of the what?
Close of that counter in that yellow, based on what you know so far, what condition is that?
Well, it just went through the structure, right?
Yep, just went through the structure and stopped moving. That count, this is what you would see in real time.
Manipulation.
So,
The condition, look at
what's red, white, and blue?
red, white, and blue right here. Red, white, and blue.
All right, okay, so then.
And then we get that counter to close. So that's direction. This counter closing is a condition. What condition is it?
It's at the end of it. I mean,
No, it's got a name.
I don't know the
It's-
terminology.
All right.
Is it the goose?
They wrote it down. It is. It is. You see it?
Okay.
Because this is the first time coming from there in this
So
window.
that's the same one over there on the other?
No, we're just looking at in this window. See, we trade in this window. You see that 8:30 down at the bottom?
Okay.
8:30. We trade between 8:30 and 11 o'clock. Like that's the only time we're looking at the
So
market.
how does that 8:30 right here is going this way?
To your right.
Okay.
Yep. So this is 8:30.
Okay.
And then we're going to the right. So here, around about 10 o'clock, I put a crosshair down so you can look at the time. You see down there? So right here. So at 9:40, so you've been looking at this or in the trading room and you've been talking and it took to 9:40 on this day
Right.
before we get a condition that's triggered.
So it pushed again.
So it's continuous?
This is the first time it comes across. It's always the goose. I'm gonna show you all three conditions in this one shaded area right here. So this condition is what we call goose. All right, why? Because it's the first time since 8:30. This is the first time that the market has gotten into the what? Sequence. See, right here, 8:30, we had what we call a cluster. So when the red, the white, and the blue are together like that, clumped together, that's called a cluster, right? We don't trade clustered markets. That market, we don't know what it's doing, right? So then we wait. Now we got red, white, and blue here, but this counter as it's closing, I can already see that there was no trade. So right here you would have had a condition verified. But then when you went to recognition, you would not have seen the price action cycle. You would not have seen the trade setup. You would not have seen the entry criteria. So the rules keep you out of a bad trade. That's why if you don't follow the rules, you have to follow the rules, right? Because the rules make you or they
Break you.
listen, if you follow them, they're gonna make you.
Right.
Now you can't be so currency driven that you break the rules, and that's what happens to people, right? So I value consistency over currency. A lot of people value currency over consistency. The currency is gonna come if you're consistent. You don't even have to worry about it. You're just gonna trade your way into paydays. You're just gonna trade your way into paydays. Before you know it, it's time to get paid again. Before you know it, the hardest part is just to be disciplined until you get to that point. Because it's gonna take time to get to that point. Because you can't get to that point in one day. It's gonna take you between 10 and 20 days to get to that point. And you have to be consistent, and all you have to do is be accountable. If you know that every trade you take, you're gonna have to show it to somebody. You're more than likely not to break the rules. And I know why some people don't show me their trade. They may be struggling, and I say, well, let's get together and do a one-on-one. Well, I got it. I know why they're saying that. Because if they show me their chart, I'm gonna question their sanity. Like what you doing? You know, when we tell you we can't do that, you see, it doesn't work. Listen, if there was another way that this worked, I would know it. I would know it. I spent for 5 years straight, 17 hours a day training. 5 years straight. 5, not 4. So you can't come in here in 4 months and know what it means. That's impossible. Somebody tell me, I think I see something. No, you don't. But you see, you losing your money. That's what I see. Because I know what's going to happen. Because that's how I created all this, right? So, you know, you got to follow the rules. All right, so that's Goose right there. That's Goose right there. Here. All right, now, another push. Let's talk about another push. So what the market does is it pushes up here. So, all right, so sometimes the market would do this. It would go sideways and it would finally trigger our what? Trigger our entry. And then after that, after it advances, it's gonna stop. And we know that this is gonna happen because this is how markets work. We're not in this trying to figure it out. We already know. This is how it's gonna work. Now, when it got here, what did it do? Reversed. But there are sometimes it would do this, come back down, and give you another push. It'll come right back down to this level and give you what? Another push. That's what that is, and I'm gonna show you what that looks like.
So is goose mode found between accumulation and advancing?
Yes. Yeah, it is. All right. So here the market came up. Is this interesting stuff?
Yes.
All right. So the market came up. Then what did it do? It declined, just like I showed you on that diagram here. You see that white rope? When it touches that white rope, and then gives you another green candle, that's the next condition. That's called another push. So bam, here, at the close of that one. Now, at the close of this candle, now that's when you start the cycle again. Now get to recognition, get to entry criteria, get to confirmation, and see what you got. If it's not right, you're not going to be able to get through all of the steps. The rules are going to keep you out of the trade. It's more important to know when not to trade than it is to know when to trade. Let me say that again. It's more important to know when not to trade than it is to know when to trade. The loser doesn't know when to stop. They don't have a set of rules. They are emotionally driven and they are currency driven. So therefore they make these mistakes. If you enter into more than 3 trades a day, you really don't know what's going on. Because the market doesn't do that. It does what? Sideways, advance, sideways, back down, back up, sideways. So you have to wait until the new move. You can't trade inside of those moves. You got it? You have to go back to the end of the line after you exit trade. That's even if you lose. Now that's where the discipline comes in at. And I write in my book, I think chapter 2 talk about how you have to be. Let me see that book, Bunny. I talk about this, I say, mental toughness. The market will throw losing trades at you, but recovery is predicated to sticking, this is page 18, predicated to sticking to the plan. Most successful traders may have at least one losing trade per day. Just like every baseball player has struck out at some point, just like every basketball player has missed a shot at some point, just like every football player who carries the ball has been tackled at some point, Every retail day trader will experience a losing trade. Successful traders win slightly more on their winners than they lose on their losers, right? You must stay focused and rational. This is page 19. You must stay focused and rational during a losing streak. A retail day trader must be confident without wavering that the strategies do and will work no matter what has just happened. You see that? That's where the loser loses, because they don't have a plan. But if you have a plan and you stick to the plan, even if you get a negative result, you know that you go back to the end of the line, this time you're going to get a positive result. It's just simple as that. Why? Because of the way the market moves. If you get a negative result, that means that the market has made a reversal. Let me show you. So let's say, how we lose, and which means lose, and risk management lose, because when this market gets right here, just like it did right here, it got right here and went up. Sometimes when it gets to here, it'll show you a sign that it's going up. And when you enter, it doesn't, and it comes back. We take the loss right there. You understand what I'm saying? That's what I mean by attacking the risk.
I got a question for you, live tape.
Okay. Tell the asset, I can hear. They got a question for me or for Tariq?
No, Tariq had a question for you.
Will somebody bring me the phone or something? Help me. They know I don't know.
Would this candle, this red candle, would that give us confirmation of a continuation? We have to wait for the initial adverse and stop it.
Can he hear me? Do your phone? No, he can't. Okay. Hey, Tariq.
Yeah,
All right, I'm now looking at it. This is the live market right here.
yes, sir.
All right, so what's the question?
Okay, so we had a continuation, this was a continuation right here. Then we got.
Hold on. Where was the continuation?
This
Point to
move
it.
right here. No, it passed. This move passed already.
All right.
We got this adverse bar right here, to stop the move.
Right.
So to stop the condition.
Right.
The question is, do we wait for price to break this, or does this adverse bar and this close, does that suffice for a continuation or no?
Oh, no. The answer is no. In order to get continuation, you got to break the last low.
The initial one that stopped the condition.
Exactly, because that was the character change right in there.
Okay. So
Yeah.
that's so the first is this one that we gotta wait for price to break.
Yeah, that has to beat that.
It hasn't happened yet, so.
Right, correct.
We're still in Malcolm in the middle.
Right. And I would really want to see a bold move here, because you see that demand signature right there, that wick.
You talking about?
At the double bottom right here. Yeah. You see that wick?
Yeah.
That's a demand signal. That's the low of the day, and it's late in the day. And if you've already made money, I wouldn't even be thinking about that unless you already mitigated. Is that what y'all doing?
No. Fabrice, he was just asking a question as far as what we was waiting for.
Oh, okay, yeah.
So I just wanted confirmation. I knew it was the initial adverse bar that we had to wait for, but I just wanted confirmation.
Yeah, because it didn't go back up there and give us that reset.
Yeah, touch, yeah.
Yeah. So you see, so this is how the configuration of your charts would be. So you see how he's looking at the confirmation and stuff over here, the forecasting and stuff over here. All right, then he's gonna come from there, and the price action cycles over here, the trade centers over here. And then over here is where we're gonna get the confirmation. So just like reading a book, you're gonna go from left to right. You'll get your positions right here, you'll get your forecast, your conditions, your direction, your structure from here. Then you're gonna come over here, and you're gonna get your price action cycle and your trade setups. Then you're gonna come over here, and you're gonna get your confirmation, and then you're gonna hit the button, make the money, and go on. That's how it works. All right, you good, Tariq?
That's
All right,
basically tick.
thank you, man.
So that macro chart is based off of ticks, right?
This macro chart, based off a certain number of ticks, right?
Ticks, and the left one, is that 1 minute or 5 minutes?
Over here,
Yeah.
in this case, it's 5.
5, and then that confirmation, the third chart?
1.
1.
Yeah. All right. So we were looking for. I think we were looking for. To look at a trade setup so we can get into that second part of it. So this is what we call another push here. Yep, so that's what we call another push. You see that? So we got this condition now. Once we get this closed, then we're ready to kind of rock and roll. Once we get this closed, and we would just have to wait, and it would take before a trade took place. It looks like it's going to take 5, 10, 15 minutes before a trade takes place, because we're in this condition, right? And then we get this counter here, and then the trade setup would be setting up within this counter within the next 5 minutes. So it might take 5 or so minutes in order to get a trade right there. So that's what we see there. Now, continuation, that's the third condition, which is here. Boom. So you see this low. This is the question that he just asked me in real time here. You see where we get here? We get this high right here. Well, we need a candle to beat that high to give us what we call continuation, a condition where we believe that the market will continue. So we would have had a trade right in here. We would have had trade number 2 right in here. And then we would have had trade 3 up in here somewhere. So that would have been 3 trades right there within that hour. So you see what I'm talking about when I'm saying you're not hitting the button over and over and over again. It took an hour to hit the button 3 times. You see the discipline we're talking about? It took an hour to hit the button only 3 times. But those 3 times is thousands of dollars if you wait for those 3 times. Make sense? All right. So that's how we look at that. Now, let's go and look at this trade setup that we call another push. Now, those of you who are in class, those of you who are in the school already, I want you to pay attention here. Did y'all see the question that Tariq asked? All right, if you notice, he said that we had an adverse candle, and he wanted to know whether or not he was confirming whether or not the next candle after this adverse candle would allow him to continue trading in that direction. And the answer was no. But in this case, the answer is yes. Can you tell the difference between what he was talking about and what this is? Can you see the subtle difference? The subtle difference is this, that when we got this condition, it's coming after another what? Push, right? So this candle, we can't trade on it if we're not already in a trade. But this candle touches again. You see it?
Okay, the wick touch.
And it gives another what? Push. You see that little small subtlety there?
What's a wick?
A wick is the stem that comes down outside
What
of
does
the
that
candle.
mean?
The wicks? Great question. The candle has what we call a body. The body of the candle is from here to here, right? Red candles going short, they open here, and over the course of that 5 minutes, they close here. But within that 5 minutes, at some point, it came here within that 5 minutes. But it closed here.
Gotcha.
So this is the low of the candle,
Mhm.
the close of the candle,
Mhm.
the open of the candle, and that small wick is the high of that candle.
Now, the red means what, going
Short.
down or short?
Down.
Going down.
Down.
And the green means going up.
Yeah, absolutely. Green candles open at the bottom.
Uh-huh.
They start at the bottom, and then they go up and down, and they close at the top. But at some point in this 5 minutes, the price went there.
Right.
But it didn't stay there, it just went there. So they want you to see the range of the candle, the high of the candle, the low of the candle, the open of the candle, and the close of the candle. Did that make sense?
In a little while. I hear you, I'm following you.
Yeah.
It's a little fast, but I'm.
It will, I mean, because I mean,
I
when
see.
we shoot this thing to you like we
I know.
like the water hose, man. But, you know,
You'll get used to it.
it's gonna be intuitive. Over time, you gonna just look at it and be like, it's not time.
Yes, sir. I get it.
It's time.
In a little while, like I say.
And I'm assuming, that could be a dangerous thing, but the wick is indicative of your risk management. Right, because that's where you got out, or where you sold.
Oh, no, that's just the high and low of those particular counters. We don't even make trades on this chart.
Okay.
We go inside this counter. You see this counter, that 5 minutes? There's a lot of information that took place inside of that counter. The price action cycle is inside of that counter. The trade sales are inside that counter.
What you mean
This
inside?
is what set, huh?
What do you mean inside?
I'm gonna show you. This is what sets us apart. This is what the world sees. But the invention is to go in there and get information. So I'm gonna show you what I mean by that. That's a good question. Inside, what do I mean by that? Let's go and let's look at it. Ready for it? So, you ready? All right. In this area, all you see is 1 candle and a half of a candle, right? Now, how much information is that? But inside of there is all of this. You see it? So we don't have to guess and hope that we're right over there like the world is. We can come over here and we can clearly see the price action cycle. Price action. That's impulse, pullback, consolidation, breakout, reset, impulse, pullback, consolidation, trap. So we enter this market right here. But look at what that looks like. You see that circle? You wouldn't have known when to enter. You wouldn't have known how much you're gonna risk. Here, we know when we're gonna enter, and this is our risk, period. This area right here, that's it. If this market was to turn around and come this way, we're out of that. We just be ready for the next one.
So doing this in real time.
Yes.
Okay, so doing this in real time, what you showing us over here on the right side, once you're involved, you can actually pull that up.
You're gonna be looking at that.
Okay.
You're gonna be looking at 3 charts at the same time. Not at the same time, but they're gonna be on the same screen. Because you're gonna look at this chart only, and you're gonna be trying to find the 3 things. Once you say 1, 2, 3, you're gonna come to this chart and find the price action cycle and the trade setup. You're gonna leave that alone, and you're gonna come to this chart and wait until that 1 minute counter closes above that red row. You're gonna hit that
Time,
button.
hit that.
Yes.
Okay.
You're gonna hit that button. Simple as that.
So now, and what you got going on is this, it basically show you, it teach you how to know what to do.
There you go, man. It's the cheat code, man. It's that's it.
That's what you got going on.
That's all. I mean, and everybody can do this. Everybody in America, everybody anywhere.
Yeah.
Because how much money is in the market? 400 and some billion.
No,
You
everybody
make it-
can't do this in America because not everybody's got the patience to do it.
Well, they have the ability to do it.
Right. Absolutely.
You know what I'm saying? They got the ability to do it. And if they allow us, if they are coachable, amenable, to guidance and counsel, you can make yourself very, very well. So here is what I was explaining. See, we have the edge because through our AI, we can get the necessary information to offset the manipulation that takes place within the minute, volume, and tick counters. We are not guessing the direction, condition, or timing. We are aggressively entering into the market at the precise moment to activate, to achieve our goal.
You know what it's gonna do.
Yeah, we know. It's fun. It's stress-free. We talk, you hear them talking, laughing, jumping, making $1,000. I mean, this is just what we do. Now, what you waiting on, my brother? I'm just messing. All right, what you waiting on? Hey, if it was me, I would be trying to write a check right now. Yeah. All right, so, but that's what we do, and that's it. So this is the condition right here. Once that counter closed, what condition is that?
Once
Once this counter closed, what condition is that?
Okay, so now that counter
Red,
is that
white,
the
blue,
Goose.
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 All right, goose. That's verified. We know beyond a shadow of a doubt that that market should go up. Because what it's forecasting, which way the market should go and should not go. Notice I didn't say which way it would go. Because I don't know that. If I knew that, I'd be, George playing that lottery and all that. But I can't read the future. But this is the way it should go, right? Now, once we know that, now let's come over here and let's get some location. Where are we on the price action cycle? So chart 1, we get verification. Chart 2, we get location. And chart 3, which you cannot see, we get confirmation. Verification, location, confirmation. That's it. And if something is awry, you won't get all of that. And if you don't get all of that, then you don't trade. You don't trade until you get all of that. And if you get all of that, and it reverses, and you take the loss below the blue rope, you go back into the line, and you start that process all over again. If I got into the balance box, and I struck out, the next time I get in there, I'm gonna get back in there the same way. It's the same. I'm going through the same process. You see what I'm saying? I'm not doing something. I'm not getting the balance box this time this way, and then this time this way, and then this time we get an overstance. I'm gonna change something. That's what people do who lose in their stuff, because they already don't know what they're doing. So a loss just puts them all over the place. But if I struck out, God, I missed it. But the next time, I ain't gonna miss them all. I ain't gonna miss them all. I'm gonna stand the same distance from the plate. I'm gonna swing the same way. I'm gonna do the same exact thing every single time. See, and that's where consistency. That's consistent. We're not trying to make $1 million in one day. You don't have to do that. You don't have to do that. I have to try to do that. So Alex, did you trade that?
Yes, sir.
What'd you make? Joey, how you look today? Okay. Curtis, we already at 4. LA, how much did you make another one after that?
Yeah.
What you got? What's your grand total? 1,000. All right.
9,000.
So he made 9. I'm talking about he made $9,000. So why we been in this room? 9,000, 4,000, 1,000.
Just on one trade.
Just on one trade. That's all it takes. One a day to keep not the doctor away, but poverty away. Yeah. So, all right, so that's it. That's kind of it. So now if you have any questions, I would love to answer those questions. And if you want to ask the trainers questions, you can ask them. All right.
Hey, so you said there are 3 charts, 3 on left to right. The first one is forecasting.
The first one is for what we just say verification.
Verification. But it tells you the direction, the condition, and the structure.
You better believe it.
Okay. What's the second?
It's
Location.
location.
But what does it do?
Price action cycle, where are we? Are we on the impulse leg? Are we on the pullback leg? Consolidation leg?
Okay.
Where are we?
And the
Trade setups.
third one's confirmation.
But the
trade
second
setups.
also is trade setups.
Which one? The second one?
Yep.
Okay.
Price action cycle and trade setups, because you match those together.
Okay.
And
And then the third one
confirmation.
is, but what is it?
All right, okay. It tells you that the market should be moving up.
Okay.
And so that's not on here.
Okay.
That was not on the bill.
So when do you pull the trigger on that? As soon as you see it?
On the
go up?
confirmation, I'm gonna show you, on confirmation. All right, so let's say we got all of that other stuff. We got all of that other stuff, and this is the counter that's moving. This counter here, and you know that counter over the course of a minute, it's gonna just be going up and down, up and down, up and down, up and down, up and down. 59, 40, 59, 48, 10, 9, 8, 7, 5, 4, 3, 2, 1. That counter is gonna stop at some point. That counter is gonna stop, and it is stopping above this red row. You see that red row?
Right.
That is the confirmation. When that counter stops moving and it closes, remember green counters close up, and it closes above this red row, you hit the button, period. That's it. Now you're gonna go into your management, you know, how to manage it. That's a management class, so that's how to manage it. 1 target, 2 target, you know, but that's it. That's the confirmation counter. The confirmation counter. That's how we do it. That's how you put the whole thing together. All the steps. So
Once
that-
it gets above the grid.
yeah, you're not gonna look at this, remember, you're not gonna look at that chart until you have the train set up in the price action cycle. So you're not even gonna be paying attention to that chart, it's just gonna be doing what it's doing. We only care about that counter. We don't care about any of those other counters. We're not reading those counters. We're not looking for a head and shoulders back. We're not looking for we're not looking for any of that. We just simply looking for confirmation of momentum. And if that counter starts above there, with all of those other things in line, we know that means, you see, you put it all together. You can't just look at that chart. You can't take a shortcut. No,
None of the other things.
no. Actually, you're not even looking at that chart. Remember I did this for, I was doing my on purpose. I'm looking at this chart for the forecast. I'm looking at this chart for recognition and entry. I'm looking at this chart for confirmation. I'm not looking at that chart here. So like the quarterback, I'm looking at the safeties, either 1 high or 2 high. You see what I'm saying? I'm not looking at the quarterbacks and all that. I'm not looking at the line. I'm only looking at what I need to know that's gonna tell me what kind of rotation we got back there on that back end. That's it. And so that's what people do. They look at too much. We're not looking at all that. We're looking at what we need to know at the time. At the time, what do we need to know? Red, white, and blue. Yes. Do we have a condition close above red, white, and blue? Yes. Are we in do we have a structure in a way? No. Good. Macro chart. Okay. Is that the impulse leg? Is that? Yes. Okay. That's the trade center, the impulse ITX. Yes. Okay. 1 minute chart. Are you gonna close? 10, 9, 8, 7, 6, 5, 4, 3, 2, hit. That's it. That's it. That's it. And it's so simple, it's like, well, what's the rest? There is no rest. That's it. That's it. Any questions? Any person students want to come and share their experience? Oh, y'all can't hear?
No, we hear here.
Okay. And I want y'all to ask them some questions. Because I'm supposed to know how to do it. You know, I want you to ask them some questions. I told you my process. 17 hours a day for 5 years to create all of it. But their process, of course, is not the same. I did all of it. I got crucified, so it could be. Yeah. Any, Buddy, they want to ask you some questions.
Yes, okay.
Ladies first.
Okay.
All right. Curtis, they want to ask you some questions next. They want to grill you. They want to see about planning change.
Can we look at their chart and see when they decided to enter the market, make it their 2,000, make it 7,000, make it 9,000, whatever?
You want to show your chart? You packed up?
Yeah.
Who's still?
So everybody's
Well,
charged.
we can put it on,
It's
we'll
the
put it,
same, it's the same chart.
Same charge.
Same.
yeah, same chart, we put it on the board and you can point it out if you want us to.
Yeah, it shows.
Yeah, I'm saying, yeah, you can just, plug, put the HDMI cord there, you don't even need the battery, because it's only gonna take a second. Buddy, you wanna show yours?
I'm locked up, I mean, you put it on the screen, I can point out what I took.
No, is this a verification question or just a information question? If it's a
I would just
verification-
say-
If it's a verification question, I would like you to show in the chart if it's a verification question, but if it's an information question, they could just tell you the time.
I was just gonna, go through the three charts and go, okay, here's where we verified, here's the location, here's the confirmation, and this is why I hit the button right here.
Yeah. Kurt, you up? You gonna put it, you gotta get it on that.
What if we want to?
My wife, my.
He just wanted to see
Matt,
where
what's
they,
his name?
where they said, when you took your train at, he wanted to see it on the chart, to see how you went through the whole process, like that we just talked about. That HDMI videos? Yeah, that's all you have to do, is just take that HDMI.
Says the technical guy.
So he ain't got, you ain't got the, he can put it there, so they call that a mobile. Right. So he can put his chart on that board with
Yeah,
that.
cause my hotspot is like going in and out, that's why she.
See, my hotspot didn't even work, that's why I didn't use it.
Oh,
But Curtis worked.
yeah, mine's kind of.
This hotel is a good spot for it, for its aesthetics, but in terms of what we need. It's cheap, but.
I bought my own hotspot and it just,
Yeah, it's got weak, I think it's more of us got on.
freaked out. And I don't know what,
They don't have one campus.
is that what it is? It's just a piece.
So, they would bring in a guy. Yeah.
I got it.
Yeah, they would bring in a guy and he would have, like, there's something he was great, but it wasn't enough. I think they wanted to charge resorts on us out, and it wasn't enough for people.
Yeah.
Yeah.
You need high-speed internet for training. You need high-speed.
That's why I get you on that fiber, you know, cause I'm not gonna go.
Oh, yeah, that's how Chase got here. Chase, he knocked on my house, came to my house to sell me. What were you trying to?
AT&T, I'll tell you a little bit about myself. So I was with AT&T and I was doing room sales and I was in this neighborhood. I knocked on his door, pitched him entirely, and yeah, that's how I
And you got
pitched.
I got pitched. I walked in, he has no joke, 8 monitors. I walk in, I see graphs on every single one, and it's on. And I've already looked at the stocks trading, and it just blew my mind. Like, God just blessed me. Neil is an amazing man. He is an amazing person.
Cause he wanted to see me train, so the next day, right?
I come.
Cause every single, I gotta get it though, cause like nobody, I'm the only person that has created that, so to hear you to be so consistent is unheard of. So he wanted to see it, well.
Yeah, I wanted to see it.
Cause he was like, but you didn't tell me that, you just act like, well, I just wanna come back by, you make your decision based on what you saw.
Yeah.
And that's fine, cause I mean, I can really shoot, so I can shoot the ball as many times as you want me to shoot, cause I can shoot.
See, I came back the next day, and he taught me a little bunch, then took me to a restaurant. He had some lobster,
Now you gotta tell everybody about it. He was doing good at first.
Hey, here's the
He took him to lunch.
Because he taught me. He broke my McDonald's streak that day.
Yeah, I said, man, man, Mike knows. I man, no, we go to see him get to a good Chilean sea bass. This is Okay, so that's,
Yes,
okay,
mine-
that's-
mine's on, come on.
all right. You got, how can we, how can we stop this from talking?
Turn it.
What about now?
Good.
Alright, so.
No, come on, Neil.
Hold on. My mouth.
So that's the part, that's his computer. So as you can see right here, before you get to the trade, you see that $65? Where you saw that 65? That 65 times 20 is how much? 6 times 20 is 12, so we know it's at least $1,200, right? Yeah. So, okay, so you told me you made 1,000, so that's 65 times 20. Kurt, let me know you got yours. That's my Alabama vernacular, yours. Got yours set up. Lanier, how much money you make? You know your 20 times 10, $20, 20, 350 times 20.
Seven,
Sounds like
seven.
6,000. That sounds like 6,000.
Mine's on, come on.
All right. Oh, let me get up.
Black arrow at that bottom there, the green camel right here. Everybody see that?
Right here?
Yeah, I'm making another thing, so.
No, we see it. Let's see.
Okay, so the camel before that was a, continuation camel.
This count.
One, to the left of the green bar. Go to the green bar, yeah.
This one.
Yeah, that was a continuation.
Continuation. All right. And why? And let's talk about why did he say that was continuation?
Because it was red over there, on the other side of the green.
And it beat that last low.
Yes.
Continuation.
Mhm.
Okay.
Take it on
Let's
down.
go.
Alright, so then, the next camel was green, was stop continuation.
Now we call that an adverse counter. So if you get into a condition and you get a counter that's going against that condition that stops, then we say, hey, put your mouse down. We're not shooting. It's like we're not in the condition anymore. It's dead. All right, go ahead.
Alright, so then you get another adverse.
Dead.
Another adverse,
Dead.
right? So then you get a red. Now, this is not another push, because the adverse camel before that one did not touch the white road.
Go up to the white to show them.
So still the condition.
Go up that wick. Go up that wick for me.
Blow it up.
Go up it. Go up
Up to
it.
that white line.
Stop. All right, so you see that wick that he's talking about did not touch that white road.
Okay.
Which means that even though the market started coming back down, it's still not safe. Got it? Let's go.
Alright, hold on, change my clothes. Alright, here we go. Alright, it's that yellow thing right there, right here. So then you get a red. Another red.
Hold on. Neil.
Tell me she talking to me.
Who?
They're coming through the speaker.
I got you.
Yeah, you know how people do homework and listen to music. When I was in school, I couldn't do that. Like I have to have total silence to concentrate, you know. But go ahead.
Alright, so now,
Quick question, are we looking at the three different windows right now?
No,
Or
we're talking about
just looking at-
We got it, Doc, we got it one by one.
Okay.
We got it. We gotta get the forecasting done before we even move forward any further, because if the
Okay.
forecasting is not right, it's nothing to do.
Okay.
So he's taking you literally through the forecasting that we just went over.
Okay.
Alright, so we got, it's three, how many conditions is it? I just told you, three conditions. What are the three conditions? Another push, goose,
Trap.
Continuation.
Continuation. Three conditions. He just talked about that this blue line right here, this blue line right here, was when this came here and closed, it put us in continuation. But even though we were in continuation, he did not get a trade. Right, LA?
Right.
Because you could not get what? The price action cycle when you went to the other chart. You got it? So when you go over there, that's gonna tell you whether or not you can trade. Now, not just that, that's just the first part of it. We have to get verification, then location, then confirmation. If you don't get verification, you can't go forward to location. And you won't definitely get confirmation. So go ahead, LA.
Alright, so now, let me go here, so you got a red candle, another red, you get another advert, we still haven't touched the white roll, so the only condition we can get as of right now is continuation, unless one of those candles had touched this white roll, we do not have it. So without having that, this candle here, this first adverse candle we got down here, price has to get below it, close below it. A candle has to close below it to give us continuation, right? So,
Stop, pause. Everybody understand? You got that part?
Yes.
Dr. Bo, you got it?
I think so.
Yeah, say what you just said.
I don't understand.
Okay, all right.
like this, as it happens. Now, everybody see that red candle over there? Let's make it just a little bit bigger. Now, everybody see the red?
Yes.
But you point to it, cause I don't know.
To the
which
far
way.
right?
I see 3, I see 5 right now.
Yeah.
Let me get my arrow. Here.
Alright.
That red counter.
Alright, now, so this candle gave us continuation.
All right, stop. I think that's what he's not understanding. Do you understand what he means by that?
Continuation in a negative direction.
Right.
Yeah.
Continuation down, because we had red down, right? Then we got the green candle. The green candle ends the condition, because we want to go down. The screen is red. We know the market's supposed to be going down, right?
Right.
So when we see a green counter on a red screen, we know that that's a trick.
Okay.
Oh, that's why you got the screen red on this side.
Yeah, that's a trick. I don't care how green this candle is and how green this candle is and how it's going up. That way, the market is not going up. The
So
market
it's
is going
continuing to divest.
down. So it's coming down. And then, in order for us to trade after this, it's got to come down beneath this and continue.
Oh, and you said that even though it's going down, you can still make money.
Yes. Yeah, you make money whether the market goes up or down or side. It don't matter.
It don't even matter. Okay.
No. All right. Let's go.
Alright.
So are you clear now? Everybody clear?
So, bro, that money you made today, you made on the downstroke.
Yeah, all of it's going short.
Yeah.
Okay, so that was my confusion point, was making money on going down.
All right, so here's what they did. So the market is just a game. It's institutional banks who are trading money between one another. And as they trade money between one another, they manipulate everybody in the middle who does not know what's going on. There's a supply spot and there's a demand spot. Period. That's what's happening in the market. And so you got banks that don't do nothing but buy, and you got other banks that don't do nothing but sell. Buying and selling. In between is us, the speculator, who is making money speculating what will price be in the near future. And that's how they create that money, right? And so all we're doing is speculating which way the market should go, except we're not guessing. We have a statistical edge to know that market should be going down. That's what makes the screen turn red. With all the elements that I explained to you, I showed you how the market works. It goes sideways, it advances. It goes sideways, it declines. It goes sideways and it advances. It goes sideways and it declines. That's all it's doing. It's the same thing over and over. Where the edge comes at is when is it gonna go up? When is it gonna go down? We're not guessing that. We know that because all of those conditions have to be there. And this market was going sideways. You can see those candles trading side by side. You see those candles? Side by side and then down. So when we see that going down, we don't know whether or not it's gonna go sideways again. But if it goes sideways and then goes down again, then we know it's continuing to the downside. Make sense?
Makes sense.
Alright, so LA, he walking us through his trade. Alright,
So I'm gonna back up just a little bit. So the first thing we got to have in order to go in either direction is rope sequence. We're going down. So if you look up above me, see the sequence we got red. Oh, I'm gonna try not moving on the screen.
So when we're going down, we're looking for a blue, white, red?
yes.
Okay, so that was the other thing that was confusing.
Yes.
Okay,
Yes.
all right.
Yes. Red, white,
Right,
Right, that's the sequence.
okay.
Right, and we have that confirmed, so that means that the continuation is confirmed too, because we start with.
Well, we got the sequence confirmed.
Confirmed.
And then once we close beneath, we got that confirmed, right? But we wouldn't have gotten a trade in there
Yeah.
because of that green bar. But we wouldn't have even seen that green bar, because we would have been over there looking at the price action. And the price action wouldn't have been right.
No, it wouldn't.
No, it would have been, it could have been at that green bar. So we're not looking at two charts at the same time. We're looking at this one, get the verification, we're through with that. Then we're looking at this one, looking for price action cycle. We're gonna see it. Cause you're gonna go to trade setup, that's your sophomore class. You're gonna learn every trade setup. You're gonna know what it looks like up, what it looks like down. And you will not be able to miss it, right? And when you don't see it, then you're like, okay, oh well. Then after 5 minutes, you're gonna look back at that one and say, oh, okay, I see why I didn't get a trade set up. That was an adverse body turn green on me.
So in this scenario, we're betting that it's gonna go down further. Okay.
Yep, that price is too high. There's not enough buyers.
Do you see that red
gotta
candle?
lower the price. You put your car out there on the street, put the sign on it, if it's too high, the market's gonna tell you, nobody's gonna knock on your door. You're gonna have to lower the price. That's what we're betting. You're gonna have to lower this price. It's not valuable.
Okay.
Did you figure it out, Eddie?
Yeah, I got it.
Okay.
Alright, so look, got a red candle, which gave
Joey,
us
you
the
figured it out?
continuation. Alright, see the green, that stopped the first condition. This candle closed below this green bar, went in continuation. Still a continuation. Still a continuation.
You got your stuff?
This green bar stops continuation. Alright? Now, in order to continue, the continuation again, we need a red candle to close below the bottom of this green candle here. This candle here closes below this green candle here. That gave us continuation. Well, as soon as that happened, the next candle, closed green, would stop continuation. Does everybody understand that part?
Yes.
Alright, now, the next candle, green, the next candle green, but that green candle, where my arrow is, did not touch this white row. So the only option we have now is still continuation, but we have to get below this green candle here. Does everybody understand that?
Yes.
Is that with just the body, or can that be the wick
No,
too?
the body will have to close, the body is where it closes.
Yeah, but if the wick hits the white line, that's it.
I'm just about the white line.
Yeah.
Yes, if the wick touches it, yes, that's considered touch, yes.
But we will be in continuation if that red body candle will go past the.
Check this out, if the wick of this green candle here
Yeah.
touches the white rope,
Yeah.
you will not get a continuation until a red candle closes down below the white rope.
Yeah.
Alright, so. Got a green, still hadn't made it below this area here yet. You get a red, another red, a green, another red that closes below. This candle here, when it closed, gave us continuation. Because it closed below the body of this, at the first adverse bar, which is green, right? Now, so we now have continuation confirmed. Alright, so now let's go to the next chart. And this is actually how you do it. You gotta have a condition first, a trading condition. This one is continuation, alright? So now I come to my middle chart. Now, what you will learn in sophomore class are trade setups. price action cycle of trade setups, right? You see where my arrow is, here's my blue line that transposed on this chart, right? So that candle on the 5-minute chart, let's show you all of them together. See my blue line over here on the 5, the chart to the left? It's the same blue line right here on my macro chart. This is the chart where we get trade setups, right? Now, this trade setup right here, where my circle is, here, is called a trap, a TRAP. You'll learn all that stuff in class, right? TRAP. That is a trap trade setup. Right, Chase?
Right.
It's a trap. Alright, now, you also need, on this chart over here to your right, stretch it out. If this circle here happens, that trap happened when this red bar here, red candle closed, and there's the circle on the end of that candle that closed. This is your confirmation. When that happens, and that happens at the same time, is when you press the button. Yeah, that's it right there. So you got 5-minute chart, continuation. Continuation. Macro chart, trade setup. 1-minute chart, confirmation. That's how it works. Question.
What is it, the circle on the far right, who puts that circle there? Is that the?
No, we do that. So as it's happening, you won't draw a circle as it's happening. This is after the fact.
Okay.
Right? It's just a trade, you're out of trade, then you grab your, from the top of this chart, which is on the orientation, how to draw, move, and all that type of stuff. So I grab my circle, and I circle the bottom of the candle, which shows me that I was right in terms of my trade setup and my confirmation candle. You get used to doing this by practicing. As Russ said, and practicing. Like you get used to doing that, right? But while it's happening, you just take a trade, go back later and circle. Like after you out the trade, you make some money.
Correct me if I'm wrong, that far left chart, as soon as we confirm continuation under that blue line, right?
All
You
below
move,
that blue line, that's a continuation.
Perfect.
Follow that candle.
then you move on to finding the price action cycle with that trap to know when to place the trade. And you look to the right in the third chart, and as soon as you see that red candle, you pull a trigger and you click this sell market on the top right.
So if that candle stops.
Candle stops and it's red.
Once it closes.
See that timer right there?
Yep.
25.
At
24.
25.
That's when that candle stops, when that timer goes to 0.
To 0, and as long as it stops and it's
Below.
short or red,
Below that red.
below that red, below that red line.
Yes.
Okay,
So, that's it.
that's it.
Everything.
Questions? Oh, there it is, yes, sir.
So you hit the button at the circle, when do you hit the button again to get out?
You don't? Alright, so good, that's a good question. All on this right side, on this last chart, this is called this section over here, is called your, chart trader, right? Inside the chart trader, here is called a ATM, Advanced Trade Management. And my preset, I set this myself, you can set yours however you want, but my preset is 1 contract, profit of 20, stop loss over 100. So once it hits my target of 20 profit, that's the target, it automatically will take you out of the trade.
Okay.
So that's management, you learn in the junior class, right, how to manage once you get in.
Yeah, that's
for
the
most
class
part,
I
you
teach.
preset all of that.
Okay.
What else you got? Any other questions?
Why are you only using 1 compared to 20 contracts?
Well, 20 accounts,
It's under what contracts?
each account is using 1 contract each.
Throw up Apex, if you don't mind, Apex Trade Fund,
Okay.
so they can see that. That's why we multiply everything by 20. And so, so the bank you know, the whole thing is a racket, right? So they just created more ways to tax you. So instead of saying you can qualify for, $1 million, they qualify you at $50,000 increments. And it takes $50,000 to make $1 million. Instead of just selling you $1 million account, they don't do that. Because evidently one of their buddies created what they call a trade copier. So he created an area for his friend to make money on his clients. So instead of giving you $1 million, we'll give you 50,000. Oh, but you can buy 20 $50,000 accounts. But in order to do that, you're gonna need to buy that trade copier over there for $150 too. You see it? So now you are copying throughout 20 accounts versus just trading one account. So versus just trading 20 contracts on one account, you're trading one contract on 20 accounts. So you have to buy that trade copy. Now I could be wrong. I've been wrong before, but I think that's why. Because it's just a way to make more money. Because why not just give people $1 million down? Then they wouldn't have to buy the trade copy. They wouldn't have to copy. So instead of using just one contract, I could just use 20.
Does this run only on Windows?
No.
They run on all platforms?
Windows based.
Yeah, it's a Windows-based system. I'm laughing because we do have people that come in and try to use a MacBook and things of that nature. And then, so now you got to go and get another piece of software that's going to convert the Mac into a Windows-based system, which is another layer that you got to go through and another feature.
So Windows is it?
Windows, that's the most simple.
Now, is this program revised often, or?
Which one? Mine?
This one here, yes, sir.
Yeah. I mean, when it has
So
to be.
you're constantly adding,
I trade every day for that reason. I trade every day for that reason.
to pick up on
To
something.
make sure, right, because if I start losing something wrong, I need to look at the whole system now. You see what I mean? Because I'm not gonna make the mistake, because I'm looking at it, I know, you see what I'm saying? So that's why I trade it, to make sure that the trades that everybody else is taking. So I put myself at risk to ruin, just like everybody else every day. So if you'll blow it up at APK,
Which one?
well, you don't have to blow it up. You see this $50,000 right here? So the profit goal is $3,000. But 3,000 times 20 is how much? 60,000. That's why we said you gotta make 60,000, baby, but you gotta make 3,000. So your profit goal is 3,000, your threshold is $2,500. So to get your risk to ruin ratio number, that's the reason I said the average trade that I may lose will be $250. Divide $250 into $2,500, and that number is what we call your risk to ruin ratio. So that's how many trades I can lose before I blow that account, right? So, and that's it. So you see they charge $167 a month to apply to do that. That 167 times 20. That's what you would pay if you want to trade $1 million, right?
Right now, that price is 71% off.
71% off. So $167 minus 71% off is whatever that is times 20. That's what you would do. There's something.
Say that again, now, what are you talking about?
All right. So,
Right now, it's $50.
right.
What's 50 bucks?
All right. So, okay, you see that? You see this here? Right here?
167, that's
But
it.
but now it's $50 because that's 71% off of that price.
That says per month?
Yes, that's per month.
For every 50,000 you trade.
I'm
Yeah.
sorry, that's per month, okay, so, but what, exactly what does that mean?
That's 50. All right. So that means that you see that 50K. That means if you say, hey, I want to trade a $50,000 account, I would say, okay, well go there and pay that $78 to them. When you pay that $7, $8 to them, they're gonna download the software on your computer. You're gonna come into live tech just like we normally do. We're gonna talk about what's going on. We're gonna let you know we got verification, let you know we got location, and we're gonna let you know that we got confirmation. And you hit the button like everybody else. And when you hit the button like everybody else, you're gonna win, you're gonna make money. When you make $3,000, they're then gonna convert that account to a paid account, and it's gonna be a real $50,000. And you're gonna be able to do the same thing that you did. And when you do that every 2 weeks, that company is gonna pay you 90% of the money that you made while leveraging their money. Going back to that question that you asked me earlier, why would they do that? It's very sweet. And we're trying to do it now. Russ, we still trying to work on that compliance and all of that type stuff, because we want to start a brokerage firm to be able to do the same thing. Let our money, let people use it, and we make money too, but this is what they're doing. So they make 10% off of that money, right, that you made. So they got the principal plus the 10% that made, they're giving you the rest. But when you sign the documents, you're giving them permission to copy your trades. So what they're doing is that while you're making that 90% for yourself and that 10% for them, they have then connected another account to your account. So when you make that money, they're making 100% over in this account, 10% from you, plus you paid them to do it. They're making money. You're making money. The bank is making money. Everybody's winning. That's how it works.
They're making a lot of money.
They're making a lot of money. They're making a lot of money. And that's why we're trying to do that right now.
I was gonna ask you, this Live Tech group
That's our group.
what was that?
That's our group. That's
Right,
part of the
right.
school.
And they're located up north?
So it's virtual. Everybody's from
Oh, I
everywhere.
hear you. Okay.
Yeah. We make what we call pajama paper. We make more money before we leave our pajamas than most people make with their work uniform on. So we do this at home in our pajamas. Everybody gets at home. Now the people in Hawaii, they what time is it for them? For Trudy and all of them when they're training? It's like
5, 6 o'clock in the morning.
5, 6 o'clock in the morning. Class for them is like 2 a.m. Because we have classes in the morning starting at 6 o'clock a.m. Yeah, so you go through your freshman, sophomore, junior, you go through the curriculum, you're gonna have to go to those classes. And you're gonna test out each one of those classes. The test will be, okay, show me your confirmation, show me this, show me that, and you test out, you know it. Because if you don't know it, you can't test out. So KQC, by the time you make it to the senior class, you have been conditioned. Like, you are not who you were when you came to us. You are a different person. You're more patient, you don't get angry fast. Like, we're gonna get all that out of you. Yeah, we're gonna get all that out of you. All of that, you get mad and cursing out, we're gonna purge. We're gonna strip you. You're gonna be, for real, like, this makes people better people. People sometimes in their testimony, they talk about how they have become a better person. They become more patient, more tolerant, all of that. They have become better listeners. Because when you ask us a question that we've already given you the answer to, we're gonna direct you to the answer. Have you looked at the video? Have you checked the class document? You gotta listen. Because there is no room for error. So that's the reason we train you that way. Just like in the military, there's no room for error. You weren't paying attention, I get shot in the head. Like, that's the consequence. Same way, you're not paying attention, you lose money. So yeah, so that's that trained copier that's talking about. But anyway, so did we walk through the trade? Did y'all see the trade from start to finish, and why he did what he did? Did you put your arrows on there? Hey, Lamar, did you put your arrows on there so they can see exactly where you entered? So that they'll know that. No, but I'm talking about from the data series. The actual arrow.
Oh, trade.
Yeah, to prove that it was real and it happened in real time. So where he has that circle, we should see the mark. So you see those marks right there? You see those black marks right there? That proves that he hit that button in that circle, just like he said. That's what he was in, that's what he was out. And how much did you make?
A
A little over $1,000. That's from here to here, $1,000.
And how much did you risk.
How many contracts were you trading?
One, each county.
120, so he risked 20 contracts, so he risked, 20 contracts. So pull up your risk to reward. They want to know how much you risk. Put your risk to reward there. So 43 times $5, 40 times $5 is $200, right? So he had a $200 risk on that, $200. Now, what is his threshold? $2,500. So if you take 200 and divide that into $2,500, you're gonna see what his risk to reward ratio number is. That's why he could take that trade, because if he had lost that trade, it would have just decreased that number down one. So that's what he risked. He risked $200. $200 is what percentage, because this is what you wanna know. $200, and somebody's gonna have to do this mathematically. $200 is what percentage of 50,000? $200 is what percentage of 50,000? 10% of 50,000 is what? 5,000. Right? What is $200?
0.4%.
That's what he risked. He risked 0.4% on his overall account to make that $1,000.
But what is the overall account?
In that case, it's 50,000 times 20, so it's $1 million.
Okay.
So he risked zero, whatever you got in your calculator, of that $1 million. That's what he risked to make that.
So 400, no, what? No.
He risked 200 times 200, that's 8,000. 200 times.
Okay.
No, 4,000. 200 times 24. So, but we look at risk in terms of a number. See, we take money out of the equation because money is an emotional thing. So we don't talk about money. We talk in terms of trading, right? What is your risk to ruin ratio number? That's different than saying, I'm risking 5,000, I'm risking 6,000. That brings up an emotion that could cause you to do something you should not do. So we don't even think about money. Why? Because we know beyond a shadow of a doubt that if you follow the trading plan, you're gonna make money. We're not even thinking about that.
Okay.
And that success rate is 80 to 90%.
Mm-hmm. Yeah.
So about the
So
plan.
so Curtis, you were 100% today, right?
Yeah.
Lamar was 100% today. Bonnie, you only took one, so 100%. Laniel, what was your percentage today?
I'm not sure.
Now he's more aggressive, so it takes a little bit of mid probability, trade. Like he may or may not care about what the ropes look like. You know what I'm saying? Things of that nature. I'm not doing that until the ropes get to where it's supposed. He may or may not be in sequence. Yeah, you used to do that too. Didn't you? You gotta have everything like.
So what is this, they're telling you is that if they don't follow the rules, that's what makes them follow the rules.
Right. You're gonna follow the rules one way or the other.
That's
Because
probably
you're gonna learn to follow those rules.
Over all of this.
Yeah,
You gotta follow the rules.
That is why we're saying that in the onset. You gotta be obedient. I know that was a strange word, but that's just there is no other word.
If you're a Christian, it's not though.
See.
As you know.
But if you're blogging, which we are, we tend not to follow the rules.
Yeah,
That's messed up.
but in this case,
Gotta follow the
even
rules.
the bargains have to follow the rules.
If you don't have them, read these two books.
All right.
Yeah.
This one's his, this one is one he recommends.
Training in the zone.
Okay.
Trading zone.
What's that big one you got?
I would even say get the other one, The Art of War by Sun Tzu.
Yeah, I got that one too.
That's how you have to think. Like, this is strategic. It's not emotional. It's strategy. You fight the war, it ain't. It's strategy. It ain't. Yeah, that's how this is. And so many people go to this thinking about money and how I can make sense. No. You're in a war. Like, you have to think in a certain way to be in the military, or else you don't get past boot camp. you won't conform. We get useless, you know. You're gonna get it all killed, man. Go home. Go work in the grocery store somehow. If this ain't gonna work.
A lot of people think that when you hear obedience, they think that you are subjected to something.
Right.
And if you look at what true obedience is, that's power.
Mm.
That's power.
It is.
Because in that, what are you getting if you do what you're told and what you're supposed to do? You win. You win. And what does the Lord tell you? He says, if you obey, you get the keys to the kingdom.
We win.
So you win. So obedience is power. A lot of people think, oh, you tell me what to do, you can't tell me what to do because I'm my own person. No.
Yeah.
You are not your own person.
There's a
Because
order.
you are part of a community.
Yeah.
Yeah, there's an order, there's a structure.
They would fall in the price. Yeah, absolutely. Absolutely. And you cannot fail if you understand true obedience. And you understand what it's there for and what it provides. It's impossible.
One of my affirmations is I am a patient, disciplined, consistently profitable trader. You cannot have consistency without those first two. I got beat up a lot before I started to work on changing my mindset.
Right.
This is a psychological battle between yourself. I mean, because you're the only person at that, well, you and all the other millions of people, but that market, you're in the market, if you can't overcome the battle within, it's gonna be hard, it's gonna be extremely hard. And I had to do it, I'm talking about, and it's not something that, oh, I got over it, this is something that I am constantly working on within myself. I mean, because you'll start to see ghosts, you'll start to, I'm telling you, revenge trading, fear, missing out, all that stuff is real. You hear everybody saying, I got that one, you get that one, 60 ticks, 80 ticks, and you're looking for the next one, and you don't have everything, you hit the button open, like the nigga said, you're gonna jump on that train while it's running, and if you miss it, and it takes off, and you hit that gravel, and cross ties, and
Bite that iron and all
man,
that.
I'm telling you, it is real.
Greed.
It's profitable, but I'm telling you, it's real.
Right.
That's why it's not a whole lot of people that do this. A lot of people might, you know, yeah, talk about it. You got it.
But see, the beautiful thing is that we're there with you.
Yeah.
You know what I'm saying? So if you do the wrong thing, it's gonna be against heavy opposition. It's gonna be, you're just saying, forget y'all. Like, cause we on there telling you, like, okay, we don't have a condition, so if you press that button, and we all on there talking about there is no condition, and you still, you know, I don't understand it. But
And I'm gonna say this, and we've been together for years now. You know, I was one of the first group of people that started creating software.
yeah, you was in the group, the pre-software,
Yeah, pre-software.
BS days, before
And it
software.
took me so long because I had so much going on to finally get it. And all this time, you know, I paid what I paid, and I paid it one time. I cannot understand for the life, and I've asked him this several, I've asked Lamar, how does somebody with that kind of knowledge and is available? At some point, somebody would say, hey, you know, you owe me another something. Right. Some more money. I'm like, how does he do that? They have that kind of knowledge, and you can just call him. I don't care what time it is. Go, hey man, you up? If he's up, you can answer the phone. I mean, you can meet him. He'll come. I don't understand. I mean, I don't know what he's gonna do in the future, but I'm gonna tell you right now, to have that kind of access to somebody that can give you an answer and not just blow you smoke, but can give you an answer to the questions you want. Man, I thought something wrong with him. I said, well, I got it. I did. I mean, think about it. If you buy a course from somebody and you pay $199, and then you're gonna pay $59, $69, $89, and then you're gonna have to pay this to have access, this to be able to have one-on-one. I don't understand, he doesn't do that. You can call him, call his phone, I got a question. He send you a chart. You might be on the phone for a while, he's gonna break down everything that you ask him. He wants to see it, you're not gonna BS him. He wants to know whether or not you really have it and you know what you're doing. So that's one thing about him that I can say that has been absolutely just phenomenal for me. I and all these guys were in class with me. You know, now they're instructors. I'm still here, but I
I just don't have time to do what they do, they make the time. I got so many other things going on, but he taught us from nothing. And he kept saying, you guys gonna get there. Nobody could see it. And now, man, I'm starting to see the sun coming up over the horizon, and it's awesome, so.
Why a man with no hair on top of his head got 2 barbershops?
Well, it's easy to keep mine cut off, cut everybody else. I don't have to work on cut mine, I have to shave mine and cut everybody else.
I was just asking.
No, that's just something I've got a IT degree, and I was line up for a power company, I was digital tech, I've done just about everything, I was CDL, everything you can think of, I just about did. But I wanted something that was gonna afford me, some freedom, I would have more control, I got tired of trading my time for money. And with this, you can go in and an hour or two and you're done for the day. I'm ready to, do some of the things you wanna do, not just what you have to do.
I was always talking about reclaiming your time.
Right. I mean, I get it.
Man, I'm thinking about what I'm about to eat right now. What they got here, shoes? I like season 52%.
What's up with season? Anything trying to go there?
Yeah, that's what I'm going. Cause they, I like the portion. Cause I have a tendency to overeat if I ain't careful. And so with season 52, you can't, cause all of the portions are 500-600 calories. So even if you get a double, you're still under 1,000. You see what I mean? I only eat for one time. But then, you know what I'm saying? So. Well, if there are no more questions.
Market will cause you to abandon some of those things simply because.
What you think?
Right, now you have to go.
They got a microwave around here, buddy? Do they have a microwave? Cause my tea out.
This gives you an opportunity
If you don't mind, if you don't mind,
to increase that.
if you'll put it in a cup for me and warm it up like that.
Contracts.
Yeah, just one of them.
So you can create your own financial security and financial.
Change something.
I'm so appreciative
To use
of being here, man.
Yeah.
You
as your way of
Yeah.
makes me charts seeing, okay, this is
because this is
All right.
you're being paid for.
Now look at, all right, ideas.
Yeah, that's it. What were you saying, Cliff?
Are you gonna,
And so
did I understand you right, were you letting the
that
junior start watching live?
that company.
I think somebody asked that question. I hadn't really decided on that yet because when you start watching it too early,
So.
you start getting tempted to do something, and you're not ready to do
Yeah, I
that.
agree.
You see what I'm saying? So that's, I'm praying about that, because I know the discipline, because we done it, we done tried that before. We had, no, look at the market, and they ain't trading, they ain't ready to trade. They don't start pressing buttons. We had several people to go down the wrong path. They ain't gonna quit, because you can't quit because you got sense. But you still have to now come up out of that financial hole and psychological hole.
Psychological.
Yeah, we don't want you to fail. No, you don't have to fail. Everybody do it wrong. Start trading, fail, and then try to figure it out. We're saying figure it out, win, and never fail.
I can see that.
Because you can't get ahead of yourself.
Yeah, you're gonna start,
The live trading, getting that like little door,
Yeah.
just for someone new.
yeah.
Yeah, that's.
And then the worst thing might happen, you might get in there and win.
And,
Now you think you got it.
You're overwhelmed.
Yeah.
So much information on your hand. I'm like, what am I doing? I don't know.
You gotta be honest.
You hit
You ain't
adversity.
ready.
You're not. You hit adversity, you have problems. And you're like, well, I might as well just quit. It's too much. It's too much.
Yeah. And that's what, you out, Kurt?
I'm gonna put the name.
Okay.
I'm probably gonna get you something.
Oh, where at?
I don't know, somewhere that I will,
Okay.
even with this software. So.
Yeah, I mean, I took the freshman test, I passed orientation, I'm gonna take the sophomore test, and I'll pass that today.
On the train seven.
Yeah, I'm good with all the trade sets. Okay. Yeah, Mark Hobbs, everything, like, he's a very good teacher. All you guys are amazing.
I paid him to say that.
He real